Hi guys. Yeah, so I'm going to treat this a lot more of a conversation to kind of identify how these folks and their respective businesses have seen adoption come into the space. So I'm breaking it up into three parts, past, present, and future. And I'll ask one of the panelists a question and we'll kind of have a conversation from there. So the first question that I have is really looking at the past. And maybe I'll start with Abel. Looking at a year ago, sometime December, Q4 last year, I would argue like that's when the market started to pick up. When did you see business start to pick up for yourself, and where was that interest coming from?
Yeah, it's a really good point in time to identify when the market has come back, not just through price as well, but from the interest that we see as a business. So ever since the market moved in Q4 last year, one indicator that we've seen a lot of is protocols, new L1s, L2s, picking up the phone, getting in touch with BitGo to ask, hey, how soon can you support our new chain? How soon can you support our project? What do we need to do? Can we get moving? So much so to the point that the team that supports new L1s had to restructure the way they accept new requests and how we prioritize those onboardings. So that was one big indicator. Things then got a bit quieter Q2, Q3 this year, and then we saw that again over the last few weeks. And that, at least in my opinion, from what we see, tends to precede some of these big moves and some of this big interest that we see. But yeah, all very interesting because we focus very much on the B2B space. Right. And that tends to be a preview as to what retail then adopt and what they get interested.
Right. Very cool. Did the two of you, Moses and Bruce, also see like a similar sector be interested around the same time?
So for Anchorage Digital, we are purpose-built for institutional crypto participation. So that is our focus. I think if you look back, it's only like a year and a half ago when the crypto market was still struggling. And it wasn't happy days, but we constantly had a slow but steady stream of innovators and investors building in the crypto space. That really didn't change during the hard times of 2022 and 2023. What we did see was that during the tail end of 2023, we had participation increase from not just the innovators and investors, but also in the sophisticated asset management side. And that was mainly driven, of course, by the Bitcoin ETF that was launched by the US side. And so US money coming into crypto in the form of crypto ETFs. So that was like a shot in the arm that got excitement back into the market. However, I don't think that during most of this year, we've had a lot of excitement in the overall new crypto participants. And that's something that I think is slowly changing at this point in time. Bruce, you want to?
Yeah, so Galaxy is a trading firm, so we mostly focus on spot derivatives and lending business. I think in the past 6 years, actually in 2024, most of the time when you remember, like Bitcoin was just trading at a range like around 60K. So at that time, we see a lot of clients that's just, following the signal using CTA, just, buy Bitcoin is going up, sell Bitcoin is going down, and keep trading this. But like, obviously, after the election, everything changed. Like we see more and more inflows and more like long-only clients trying to stay with their positions or doing sector rotations. But yeah, I mean, now it's much more exciting compared to like a few months ago. You can see a difference in volumes, also in terms of like the funding rate in the perps futures. So, it's getting started, I think.
Great. Actually, that's a great segue to kind of touch on the present. So it sounds like Q4 last year in the respective businesses, things did start to pick up. For you, it was the protocols, and then it was the same institutions coming back in, and then that was a bit muted, but it seems like the US election was a big pivotal factor that kind of brought the market back again. So I'm curious whether or not that has brought about a different type of people to your businesses, and how that has shaped things now.
Yeah, if we define the present as everything that has taken place around the election time to now, then it's been crazy. It really has been crazy in the sense that, and we were just talking about this backstage as well. A lot of the conversations that as a business we are forecasting for Q1, Q2 next year are taking place today. A lot of the plans across the entire spectrum, whether they are investors, builders, traditional corporates, Web2s, a lot of them want stuff to take place now. And I think that's on the renewed momentum and renewed positivity around what a Trump administration could look like. And I guess the effects are felt even more pronounced in this part of the world, right? Where if you look at countries like Australia, Japan to a certain extent, Korea to a certain extent, Taiwan, Singapore, Hong Kong, a lot of them tend to take the lead of the US one way or the other. Right? A good example is with the ETFs, where once the US approved the ETFs, the Hong Kong ETF then came to life very shortly after that as well. And not long after that, the Australians also approved an ETF as well, reluctantly, right? So I think we'll see a lot of that heading into 2025 as well. So I think a lot of institutional investors, a lot of those that were on the sidelines before, that have done the homework, that have kicked the tires, that have gone through the due diligence, but just haven't pulled the trigger yet. I think that could take place a lot sooner than we expect them to be as well. And this spans across the entire institutional landscape, right? Whether it's sovereign wealth funds, pension funds, family offices, traditional asset managers. I think we'll see a lot more over there. So let's see. The current is certainly very exciting as much as the future as well.
So for current, I think it's mostly anticipation because it's not like Donald Trump has already started or done anything yet. So it's just like what we assume will happen early next year. And so for Anchorage Digital, we are the first crypto native bank in the US. So obviously we have a lot of anticipation as to the clarity and regulatory framework that will happen in the US. We think that there will be a more embrace of innovation, specifically around stablecoins and the actual use of blockchain technology, whether it's in real-world assets or in crypto-native format throughout the next couple of years. But that isn't something that would be kind of like clear as of right now. And most of the market movements and most of what's happening right now is more or less, in my opinion, anticipation and market movement, and we'll see a little bit more volatility until there is a little bit more actual policy that gets implemented early next year in the US. And as Abel said, I do believe that other regions will take cue of what's happening in the US and start to implement regional regulation. I know that there's something going on here in Taiwan as well. And so what we'll see is more like current plans of regulation, and that will like transform into actual action in the next couple of months.
On my side, I think we are seeing inflows from different type of clients that we didn't see before. So, for example, the obvious one is the corporate side. So, everyone want to replicate MicroStrategy now. So, like using the company balance sheet to buy Bitcoin and to kind of like revalue the stock. So, this is obvious to us. And second part of the segment would be family offices. So, in the past, I think family offices may not be that aggressive in buying Bitcoin, but now we are seeing them slowly allocate more money in Bitcoin. And second of all is that when a rate cut cycle begins, then the yield that they're getting for fixed income side is actually lower. So while like the funding market in crypto is actually very aggressive, so let's say they can only lend to UBS at 4%, I think crypto company can offer roughly 10%. So this is something that they would like to allocate. And the last part, I think I'm seeing also like hedge fund clients. So in the past, we have quite a lot of hedge fund clients saying like they're involving digital asset. but in fact they're just mostly doing basis trade, like short basis, like short CME futures, long Bitcoin, delta neutral. But now we are seeing more directional bets or like relative value bets, like saying like long ETH ecosystem, short Solana ecosystem, something like this. So this is also promising. And also we have some type of traditional clients who want to get exposure, but not by long spot or other things. So we're seeing, like recently we're seeing a lot of company actually issuing convertibles. So we see marathons, we see MicroStrategy, we see Riot platforms. They all issue convertibles, and those investors actually they're not crypto native investors. They're real institutional money trying to get exposure in crypto credits, and trying to buy call at cheap price. But on the other hand, on the issuance side, it actually makes total sense because the floor is super high now. So you want to get cheaper funding while selling for at a high valuation. So that's why we see a lot of convertibles issuance.
Right, great point there. Actually, I'm going to stay on you and touch a little bit on how that adoption looks like. Is it just the yield, like you compared fixed income to the type of yields that you can get in crypto? Is it just the yield that are bringing these guys in, or is there more things that need to be done to unlock this capital from family offices or newer capital allocators?
Well, I think, to me, crypto and Bitcoin are kind of different thing now. So Bitcoin is Bitcoin. Bitcoin has already proven to be kind of a gold standard. So it's very easily to implement in someone's mind saying, oh, it's a digital gold. This is narrative. So people say, okay, fine, I will allocate some money to gold. So why don't I just allocate a digital gold as well? So this is on Bitcoin part, which is very promising now. You saw all the flows going to Bitcoin, and the dominance is still keeping very high. So some people may argue like, so that's why the off season hasn't started. And on the other hand, on the crypto adoption, it's getting tricky because I think it's not just about Bitcoin. So when you think about Ethereum ETF, it has underperformed for a very long time because it's very hard to sell. So what is Ethereum? Is it like a smart contract? Is it a computer? Is it software? What is Ethereum? So I think markets still need more time to kind of understand what crypto does. And of course, you have a lot of different applications now, tokenizations, like you have, on-chain treasury, etc. So this is a use case, and institutions can buy it. But if you talk about crypto adoption, as in like, oh, shall I also allocate some money to Aave, to Hive, to anything? I think it would take a very long time until the market or like the general participant know what's going on, knows the narrative behind it.
Right.
It's a very interesting thing where you clarify that Bitcoin is something easy for large institutions to understand, and I agree with that. But right now, I think there's more interesting iterations of Bitcoin that institutions are actually starting to look at as well. Institutions are also very interested in asset productivity. And for Bitcoin, so far, it's mainly been buy and hold. But new projects like Babylon, Lombard, and so forth, they are implementing technology natively on Bitcoin that allows for Bitcoin to be an actual asset that is productive. And so that is something that's kind of new, that's happening right now. I'm personally very excited about it. And the other thing that's very exciting about these kind of new innovations on Bitcoin is that institutions that already hold Bitcoin will then be educated and ease into being able to interact on-chain natively for asset productivity of Bitcoin that they hold. So by being able to do that and being introduced into native crypto and native crypto ecosystems, as well as other kind of smart contract interactions through Bitcoin, I think there'll be increased interaction and adoption from the institutional side because of new innovations that are happening right now.
I guess another interesting thing to point out as well is staking, right? Since you mentioned Babylon and some of the newer use cases that people can enter Bitcoin and do with their Bitcoin as well. Do you get the sense that in the current, with where the discussion around staking is, even for the ETFs, whether there is traction for this to be an angle for newer money to come in and to be able to invest in assets that can make them work harder as well over the long term. Is that something that you guys see as well?
I love staking. Staking is awesome. However, it's kind of like dependent on the cycles, the crypto cycles as well. As we enter into bull market, and I think it's arguable whether we think it's like which part of the bull market. Are we in the beginning phases or mid phases? And I think most people think it's probably the early stages of a bull market. Staking is something that people would still be interested in. But when you get into the frenzy, people would gravitate more towards being able to move their assets and deploying it faster with more liquidity options. And when you get to that stage, then people are less interested in staking. But of course, like the flip side happens as well for institutions, because you can also use staked assets as collateral to gain leverage on your positions for trading as well. And so staking is actually an excellent tool set for institutions to build upon the strategies that they would be able to deploy. So staking, as well as crypto native interactions, and then using assets in a more productive way is like making institutions more interested at looking at crypto because it has additional functionality that is a little bit different than traditional finance.
Right. I'm just going to pull us back to the discussion that Moses, you brought up a good point as well on regulation, and people are actually anticipating what Trump presidency could mean or what other regions would come up with. Now, I'm going to broaden the question a little bit because regulation will be one part of it, but what sort of challenges do you think we still need to overcome in order for that adoption, that anticipation to become realized? It could be regulatory clarity. Maybe it could just be something as simple as whether or not people are allowed to, corporations are allowed to hold tokens, or which jurisdictions these tokens are looked under within the relative countries, or it could be education, or it could be crypto infrastructure. So what do you think, from your view, needs to happen to kind of bring on the capital allocators that we were talking about earlier?
I think you kind of answered the question already with regulatory clarity. Thank goodness, right, that the world of regulation by enforcement seems to be behind us. And I think a lot of builders over here will agree that, anything that can provide clarity helps with planning. With the planning in place, you can then invest, allocate your resources accordingly, strategically, and that's always a good thing for businesses. It's a very similar thing for us at BitGo. Today we've got 7 regulated entities around the world, 2 in the US, Germany, Switzerland, Dubai, Singapore, South Korea, and yesterday we also announced that we'll be going through the full phase of our registration in Taiwan as well. And so that clarity provided by the various regulatory bodies around the world is also beneficial for us, because when we are compliant, we can provide the full breadth of our infrastructure in these jurisdictions, and that allows our clients, regardless of whether you are an exchange, a VC, a traditional listed corporate, to then plan ahead and think about the infrastructure and the security of the infrastructure that you want to go ahead with. And guess what? That benefits the entire ecosystem at the end of the day. So I really think it's that regulatory clarity that's a really good first step for us in enabling a more compliant and more secure future in our ecosystem.
I'll probably zoom out and not just talk about institutions, but one thing that has been a continuous friction between crypto with crypto natives and the rest of the world has been the kind of on and off ramp of assets. So in various different jurisdictions, there's been friction of moving traditional assets over to crypto and crypto assets back into traditional assets. Now, this should be frictionless. And once this becomes frictionless, I expect that the entire crypto ecosystem will grow even further. So I believe that regulation will enable us to be able to interact more freely with the traditional world. I don't think that there'll be as much friction with banking systems and crypto. And so we're looking forward to this kind of change and clarity in the banking system as well, where normal people would be able to move assets freely, and not just freely, but at zero to no cost. And so this is like one of the things that I think will definitely change in the following months, in that many businesses were set up to be able to profit from this friction. And I don't think that that will continue.
I actually totally agree. So the main issue right now is definitely the regulatory clarity, and also like how freshness it is to, to trade on spot. So like this is for the long game. So like I think, if you convince a listed company to say, hey, you should trade on spot now, like open an exchange account, open a custodian account, and you're done. It's not going to happen in 1 year or 2 years. It takes the time to get used to the operating procedures and stuff. So I think what we have mentioned about like those things are kind of a long-term solutions. And from my point of view, like, while all the builders keep buildings, we still need some innovative short-term solutions. So when you think about crypto is essentially an assets market. So what I mean is like in traditional finance, you already have a lot of different tools to solve for assets issue. For example, in equity, in stock world, not everyone can buy Taiwanese stocks or Korean stock easily. And what did banks do to facilitate that? They have derivatives, they have ETF, they have swap, they have forward. They, you sign Easter with those guys, they just launch a swap, you give them financing, etc. So I think in a short period of time, for people who want to get access with crypto, but still waiting for the infrastructure to get ready, this type of innovative financial product, actually it's not innovative, it's just copy and paste from traditional finance. But I think this product is going to help a lot for those customers to, hey, I can launch on swap on Bitcoin. I don't have to change any operating procedures. I just have to sign Easter. I have to use the same trading system. Then it's done. So I think for short term, this may be one of the solutions that we can see a growing derivatives market across Bitcoin or all the crypto.
Right.
I'd like to add on that, as you were talking about traditional finance. So regulation will allow even traditional finance companies operating within the traditional world to be able to use crypto to enhance their own operations. So let's take an example. We have a traditional stockbroker that has a liquidity provider. And they have to use the regular banking rails and do T+1, T+2 settlement. Now, they could rip that out, and regulation permitting, they could use stablecoins. They could use regulated, trusted stablecoins to settle within their own traditional finance business. And so regulation will allow these kinds of use cases to happen going forward.
It's funny that you mentioned that. I was going to say the exact same thing as well, right? With the stablecoin that Anchorage and Galaxy have sort of put out recently, BitGo is launching our own stablecoin as well. It clearly is an important part of the infrastructure that I think a lot of regulated firms have identified as a key core in order to enable that frictionless future to come about as well. And some of the announcements with stablecoins that we've seen over the last 24, 48 hours have been huge, right? Binance's agreement with Circle to facilitate more USDC trading pairs, Ripple's announcement of their own stablecoin as well. I think going forward over the next 6 to 9 months, there's going to be a lot more of these announcements, and certainly could be a very interesting part of the space to look out for.
So we have about 5 minutes. So I think I just have one more question on the future of where you think this is going to be. And I think you guys are kind of answering. Every cycle, we kind of build the next block of where crypto can go to in the future. So I guess I'm kind of curious, what do you think as an industry, the goal would be for us to achieve this cycle? Would it be that frictionless pay on-off ramp that you guys were talking about? Personally, I want just one single use case to really undoubtedly be stronger on blockchain that the world can acknowledge. I don't think we have that yet. I don't know if it's too early, but that would be my hope. Yeah, so I'm curious for thoughts. What would be that one thing you think as an industry we would want to accomplish for adoption?
I actually want to get back to stablecoin. Actually, I think stablecoin may be the biggest thing in this cycle. Because, in the past, people on-ramp just to buy crypto, mostly to use to buy crypto. But now I actually have some corporate like friends or like ex-colleagues. They're working like cross-country trade, like, maybe doing export-import in Brazil. If they take in Brazilian dollar, they have to face the currency risk, they have to face the settlement risk, etc. But with stablecoin here, it's real time and it's US dollars. So kind of two major business risks were hedged through stablecoin. And there's a kind of essential need for them to do it, to accept it as a payment. So with more regulatory clarity or like, with more people realizing this, that stablecoin can easily hedge a lot of business risks, I think it can be a very big thing. And that's why a lot of people are building stablecoin right now.
I'll zoom out on that as well. And it's not just stablecoins. If you really think about it, it's actually doing business and settlements. So the promise of Satoshi was to be able to cut out the middleman. And that is a principal architecture of what we're all doing in crypto. And essentially, that is a powerful tool for corporations to do trading in actual goods. It's also a very important thing in traditional finance to be able to settle in a very secure way, in an atomic way. And so the real world use case that will happen, guaranteed, is application of public blockchains, not private ones, but public blockchains with companies that need to settle, whether it's in stablecoin or in any other types of assets or representations of real world.
I'll try to answer your question, Warren. And I don't think that this will happen this cycle. But the day we can, all four of us, go for a meal together, settle the bill together with crypto on a public permissionless blockchain across the various apps that we use, I think that's that one moment where we know we've kind of made it in that cycle. I don't think it's going to happen in this cycle. We're still far away from there. But from my Hana Bank app to his Grab app to his WeChat app can settle with either a stablecoin on a harmonized blockchain, or even Bitcoin, I think we've done a very good job in providing the infrastructure to get there.
Right. No, I actually would. Thanks for all these points. I actually would have to agree with Moses and Bruce. I think that stablecoin is, or settlements more broadly, if we zoom out, that as a use case, if we can claim that, that would be a great foundation to start the adoption cycle. So yeah, I think that brings us to a close here.